What up, JT? What up, bro? Market is open. New daily candle is open, and we're driving up to the upside during market open. You guys can see here, these were my trades for today. This was last night, Sunday the 3rd. This was this morning. Sorry, during Asian session. No, this was actually today at 8 in the morning, and then I had another trade in the afternoon at 12:30. First in my heart. But I'm doing the 50K challenge, and I need 3,000 to pass, and I'm at 52.12, so under 1% away from passing. Fuck, I was hot. I turned the AC down. Now I'm cold. Let me turn this shit off again. I've actually had a banger week, dude. Banger last week, banger the previous week, banger the week before. Just straight bangers. I've been hustling, following my plan, dude. Just following the plan. Oh shit. It's crazy how on Telegram it shows my description where it says, "Don't listen to me, I'm an idiot, not financial advice, stupid." So you gotta preface it, bro, because people take shit too seriously. They're like, "Let me see your broker statements." Do you want to see my bank account too, buddy? My dude. How you doing, brother? We got a few of you guys in here, so let's get this analysis going. Let's get this breakdown going. So what did gold do today? Gold today just closed doji. We drove up, we drove down, pretty much stayed in the same spot. What's our 4 hour? Our 4 hours just straight consolidation. We're just stuck in this range right here. We're stuck in this range. So, boom. The fact that we're stuck in this 4 hour range, let's see. We attempted a breakout out of this range, failed. Came back, retested the lows of the range, and respected. We did form resistance midway through. What's with all those arrows? Wait, what arrows? Wait, what arrows, bro? Oh, these? Nah, I am not having a child. This right here was me full porting buys. So I'm about to explain to you guys how I pass these funded challenges, how I go into them and my thought process, right? So This trade right here, I made $200 on. I low risk this trade. This trade right here, when my entry right here, my stop loss was down here at the bottom of this wick. Because my stop loss was all the way down here, I didn't enter very high on the entry. But because my stop loss on this trade was technically below this wick, but I gave myself room to the bottom of the range, I stacked 3 entries on this trade. So I went in 3 lots here. So this trade was a 1 lot entry with a 50 pip stop, and this one was a 30 pip stop with a 3 lot entry. So I was risking $500 here, and on this one I was risking $900. So I was risking $900 on this trade. So it hit the 1-to-1. I made 900 here. I made 200 here. I'm up 1100 for the day. On my final trade of the day, on this beautiful rejection that we had from the bottom here, I risked all my profits for today on this trade. So normally I risk 500, then I upped my risk to 800, and now I upped my risk to 1200 because I now have all the profit from here cushioning me on this trade. If I lose these 2 trades, if I lose this trade, I lose the profits that I gained on these 2 trades, and I'm basically break even for the day. So with Top Step's trailing drawdown being reset every day, once I hit that $1,000 loss, tomorrow or today at 5 o'clock, my drawdown resets and I can trade again. So that's how I take these funded challenges, because now that I'm risking $1,200 on this trade, I closed at like $900 profit. So it was almost a 1-to-1 before I had the full closure on here. So I risked my profits for the day in order to get a really good boost. So in total today, this was 800, right? This was 800. No, this was, in total these two were 1200. Sorry. I was up 100 after losing. So in total these two were 1100 plus 900 on here. So it's in total a $2,000 day. So 90% of my challenge passed in one day. And it's literally taking normal trades. I risked 1%. I upped my risk to 1.5%. I upped my risk to 2.5%. So with the cushion that I had, that I gave myself here, I was able to up my risk comfortably here and still not have any issues or not blow the account. If I would have hit my stop loss, I would have still been in profit on the account and up for the day. So that's how I treat these fundeds, bro, because honestly, for me, I'm not wasting my time doing one account for 8 years. Unless it's like a 100K account or like a 200K account or something expensive that you're better off grinding it out. But bro, if you could reset, bro, or start over, you're better off not wasting that much time. A lot of the time you find yourself spending way too much time trying to pass the challenge. You go through amazing market cycles during the challenge, and then you hit a fucking consolidating week when you go live and you end up blowing your account because you just went from beautiful price action to a shitty price action week because it just so happened to line up that way. If you just go on a 3-week win streak, right, and you've passed a funded challenge, your 4th week is likely not going to be your best week. You just went on a 3-week winning streak, you know what I mean? So that's why I'd much rather over risk, pass the accounts faster, so that way when you do get the live account, you're not, 3 weeks into winning when you finally, 4 weeks into winning when you finally get your live account, and you've been winning for 4 weeks straight. The pressure is on. It's tough. So me personally, everybody's a little bit different. Nah, bro, look at what you're doing, Market Mechanic. You're getting everybody excited over here. I'm not having a child, gang. First, I gotta get married. Marriage is first. Once me and my girlfriend get married, the child is immediately after. You gotta follow things properly. Nah, Market Mechanic is starting rumors. Yeah, my kids are all of you guys. You're all my sons. You're all my sons. I'm just kidding. I'm just kidding, gang. Just kidding. But in all seriousness, I mean, I believe that makes a whole lot of sense, right? I started off the week plus 1% on the funded challenge. I risked 1% on this trade. Then I risked basically 1.5%. Then I risked basically 2%. So once I had 2% profit locked in, I risked 1.5% on this trade, leaving me with 0.5% profit. If I do take a loss, I won, putting me at like 3% profit. So then I risked all 3% of the profit that I made today on this trade, which locked me in another 3%. So that's in total a 6% day basically. No, sorry, 4% day. So it was 1%, 1.5%, bringing me to 2.5, and then this was like another 1.5% or something like that. But if you would have risked your normal one lot here, this would have hit for 20 pips, 200 bucks. This would have hit for 30 pips, 300 bucks. This would have hit for another 30 pips, yeah, 300 bucks. So that would have been 300, $600 day, 1% day versus a 3% day by risking the profits you already made. And that's why when you start a funded account, you really want to get those first few trades to be A+ setups. And I personally over risk on the first few trades, and I ensure that they're A+ setups, which gives me a cushion. So immediately within the first day, I'm up 1 or 2%. I now have a 1 or 2% cushion every trade, right? So if I can risk 2% on the next trade. If I lose it, I'm back to break even on the account. I can continue with no issues, no problem. I don't like grinding out of a funded account slowly. I've wasted way too much time doing that. And I mean, with these Apex rules, bro, I mean, these Top Step rules, it's just so much easier. Like, I took a loss, where was it? I took a loss shorting right here, I believe last week. It was Friday, actually. I took a loss Friday. During Thursday night, during Asian, I took a loss. Right here. I took a short. As we came down here, I took a short. Price wicked once and then never came back to my entry. My stop loss was above the highs over here. So this was the short that I took during Asian, and I lost. I hit full stop loss here. And I stacked 4 different entries, so I was in 5 lots deep. I lost $1,000 that night. I was in 5 lots deep, which is something that I normally don't do. So it's so this is another thing, right? On this trade, I married my bias and I tried to pineapple out of the trade thinking that, okay, the bottom wick has to be made today. The daily opened up with no bottom wick. Where was market open? No, this is the daily opened up with no bottom wick. And as we made a bottom wick for the daily, that price came up, tried to rebroke. This is what happened when we rebroke the daily highs and failed to drive and had this massive candle push to the downside. That's when I instantly market executed sells, because I said, okay, we rebroke the daily highs, we're breaking back down into range, we're most likely going to come and range. But in reality, I didn't have that much confirmation that we were going to come down. I just based it off the rebreak of the daily highs and it failing to drive and coming back down. That was my entry for sales, which in reality wasn't the best setup to take, which it kind of still looks identical to these setups here, because but it was a rebreak of the daily high. So that's something that during Asian, so that's something for a reversal to happen during Asian, when there's not that much volume, it's tough. I mean, it can happen, but I tend to think of Asian as a lower volume time, and I don't expect crazy things to happen during Asian. So I kind of expected us to range here, but we actually broke out and continued driving. So this was actually, I would have only lost $500, but I entered another position here, another position here, another position here. I think I had 4 positions running here, and I took the full 50 pip stops. What's it called? So today was a range day, right? So what did I notice about ranging market that we're in. So we started off the week respecting the lows, respecting the highs, respecting the lows, respecting the highs. I took an entry market open on Sunday after we had this massive wick to the downside, and then once we started pushing back up into zone, I took an entry right here to retest the market open. That was a beautiful trade. And then over here, the same thing. Once price came down, attempted to break out of range and failed. Once we had this test here, this continuation to the upside was a perfect entry. What do you have? You have the 5 SMA scoop right here, or the 15 scoop on the SMA there. The 5 scooped down here and is starting to continue it. We're riding the SMA up on the 1 minute. The SMA is riding up on the 1 minute, perfectly clear. So that was a beautiful entry. I think I took that entry off the bottom wick on the higher time frame as a bottom wick entry. Yeah, that was actually the 30-minute celery. So as the 30-minute closed doji that we came down for a bottom wick, I took a flip of the 30-minute candle to the upside. So that was a beautiful 30-minute celery right here. That's a perfect fucking celery. If you guys that don't trade TBS, you can see it right here. This is the celery play right here, where you have a closure above the range. The next candle closes doji, respecting the closure above the range, creating a new resistance above the range, and the next candle comes down, forms a bottom wick first to grab orders, and then flips bullish. Your entry would be on the buy stop of the break of the high of the doji candle, and your stop loss would be the current low formed on this 30-minute. So because I give myself a little bit more room, I look down to the nearest support on the 1 minute or the 5 minute, and that's where I put my stop loss, because if we do come down to that support, we have an opportunity for us to bounce off for another attempt at the drive that I was looking for. So I would take a second entry at the bottom close to my stop loss, because that could be an area where price would tap for a continuation for the move that I was looking for. Maybe it just needed a little bit more liquidity. So that's why I give myself to the next 5-minute range, so where I could take a pineapple. But like, for example, here, I'm putting my stops on the break of the daily lows. If the daily lows start to break, this shit's flying down. We're just respecting this so clearly that if we do start to wick below this, start to close below, this is coming down. What would I name my kid? I would name him Haikanashi. I'll name him some Haikanashi. On the I'm in a swing buy right now. I am looking, I entered here on this wick up. Sorry, I entered here. So I was looking for an attempt at the rebreak of the highs, but it looks like we might not get it. We're consolidating here towards the bottom half of the range. We've rejected this little order block here, and we're starting to push to the downside. That swing might hit full stop loss. But as for today, for Asian session, man, we got to get out of this range, dude. Unless we come down without really making a top wick for the daily, and then we bounce off the bottom of the zone here, I will take buys for a continuation to the upside. It looks like today the market ranged, all of London the market ranged. Today we attempted to break out. I mean, we're in this massive little range, but look at since 12 o'clock we've just been consolidating all day. I think that man, Asian tonight just looks like it's gonna consolidate. It just looks like it's that night. That's what it's looking like to me. Yeah, that makes a lot of sense. You can see it just in the fucking candles, bro. That And honestly, this is actually not bad, because what are you noticing here, right? You notice this range that I drew on the 4 hour. What happens when we wick outside of the range? We break right back into it. So you can take that as an idea in order to take a trade, and that's exactly what I did today. So once we wicked out of this range here, I took buys coming up. Once we wicked out of this range at the bottom here, I took buys coming up. Over here, I was attempting to take some sells, but after I made my loss back and profited after Friday's loss, and I was up for profit, I decided to just quit for the day, until I went back to the charts a few hours later, where I actually had time to sit down at the office and chart a little bit. And then I saw this beautiful trade, and then Market Mechanic called a buy. If you guys aren't subscribed to Market Mechanic, this is for you. Subscribe to Market Mechanic. He called this beautiful, beautiful, beautiful buy, and that gave me extra confirmation that I was correct in the analysis. I stacked on this entry, and beautiful, beautiful, beautiful day, dude. Beautiful day. So with the news coming up, last time, let's go back to 2016. Let's go back to 2016, November 4th. What did I do? November 9th. That's trash. What the hell? Alright, so I guess I'm just gonna try to see if I can circle it. Last time Trump became president, November 4th. Nothing fucking happened. November 4th, market actually drove up. November 16th, November 4th, 5th, 6th, and then market opened on Monday and we gapped down, and then price drove up and gold started breaking highs. So I mean, this is iffy. This just makes sense that it was gonna happen. I mean, what do you have here? I don't think Trump did this, dude. I don't know. So, I have two different ideas, right? Market heard about Trump, got scared, price dropped. Now that we know Trump did well, we know his presidency wasn't a failure, are the markets gonna react like this again? Are they gonna be scared of him again? Or is the market gonna start fucking flying because they know times have changed and we're not fucked anymore? So, what we could see tomorrow, gold is a safe haven, but yet a few days after Trump was elected, gold drops 200 points, which is 2,000 pips. Right? So people took their money out of gold when Trump was president. And now the opposite could be true, and they're going to put their money back into gold as he becomes president. I think Trump's going to be overall good for the economy, overall good for everything. I think we're going to get a nice little 200 pip pop to the upside once we find out he's president. Like exactly what we just had here. We find out he's president, gold, boom, huge pop to the upside, and then this will give us our decision. Will we continue making new highs, or will we reject and do this fucking 200 pip pullback right after elections? 200 point pullback, 2,000 pips. What's funny, look at what happened after November 16th, 10 days after Trump was elected, before he even made a single decision. Look at how gold just death drops. But gold also hit a level of interest. Gold also hit a level of interest right here, and we wicked off the level of interest. We wicked off this massive bearish area that we have right here. So it makes perfect sense for price to wick off this area after retesting it 20 times and then plummeting down. I mean, it could just be a coincidence that Trump was president at the same time, and that was the catalyst that price needed to give us good orders here so everybody can sell. So I mean, but even then, this retracement that we see here is nothing wild. Gold does this all the fucking time, and it comes right back and just continues making new highs no matter what. You just look further and you're like, oh look, Trump caused the gold to crash, and perfect, let it crash 2,000 pips, bro. This is perfect. This is what I would like to be in. This range here, that's what I like to be in. Ah, shit. I like to be in some shit like this, you know what I mean? I like to be in like this, bro. Where I can scroll back days and days and days and I have data. I can scroll back days and days and days and I have data. That's what I like to see. They deleted my markers. This is why I draw out my markers before they delete my entries. Yeah, all I know is that during Trump's presidency the first time, I wasn't making as much money as I am now. And now the second time around, I will 100% focus all my investments and all my energy into making investments during what will be the best time to make investments, bro. If he can get us back to a fucking 2017, 2016 economy, bro, the amount of wealth that you'll be able to build will be insane. Think about it. There was investors in my area were selling fourplexes, or they were selling quads of townhouses. So the guys owned 4 of them. So you would be in a community and there would be 4 townhouses, and you know how there's like 4 townhouses, 1 on each corner? The guy owned all 4 of them, and he was selling them in blocks of 300K. Blocks of 300K. Blocks of 300K. 400K for the ones that are super remodeled. So think about it. At 2%, 3% interest, You finance 400,000. You put your 3.5% down. You're gonna be paying around $3,500 a month for that. $3,000 a month you'll be paying for. Nah, if you get the cheap one for, let's say you get the one for 400, you'll be paying around $3,500 a month for that. But you have 4 units that each rent out for $1,500 a piece. That's insane. You rent out 3, you're living for free, and you have an extra like $1,000 a month coming in. Now, those rents are $3,000 a piece. In a few years, you would have been, instead of pulling in, living for free and an extra 1,000, now you would have been living for free and pulling in an extra 4,000 a month. Within a few years. That's how a good economy can set one person up for life. Like, most of us here that have a decent job can qualify for a $300,000 loan. So imagine if it was 2017 and you were trying to buy that fourplex, you would have easily qualified. Imagine if that fourplex right now was selling for 300,000. Bro, come on. My house used to be worth 70K and now it's worth 300. In 2017 it was 70K. I could have bought 4 of them, bro. That's why the more I look back at Trump's economy, the more opportunity that I saw in that economy that I couldn't take advantage of because I didn't have enough money for, that now I do. And now I'm like, wow, look at the opportunities that we're being robbed of because of who the president is. Like, that's, the more you see it that way, bro, where you're like, wow, if only he would have remained president, things would have been like this. This would have been like this. And that's the thing, bro. I live in the ghetto, but it's not the ghetto anymore. It's gentrified. In order to live here, you need to pass a background check now. That's how expensive things have gotten. I bought when it was cheap. And now if you want to live in my area, first of all, they don't accept first-time buyers. So if you're a first-time buyer in my HOA, they won't allow you. If you have a felony, they won't allow you. So the only way that you could live here if you have a felony is if you're living in somebody else's house. And even then, if you have a car here, your car has to be registered and they have to know who the owner of the car is, and that person also has to get a background check. And if you have a guest, your guest car can't be parked for more than 3 days straight, or else you're abusing the guest privileges and they tow your shit. So, like, they literally changed everything. Like where the ghetto was, it's now the rich white people area. It's crazy. But that just goes to show you how important the president is. Because you look back and you're like, how much was my house in 2017? What the fuck? How much was this in 2017? How much were loans in 2017? How much was this 6-unit apartment building right next to me that I look at every day and I'm like, damn, it'd be awesome to own that. I looked it up in 2017. It was 600,000, $100,000 a door. Bro, $100,000 a door is $1,000 a month, and basically in mortgage. Rent would be $1,200, $1,300. Times 6, you're pulling in a couple grand a month without having to do anything. When rents go up, like they just did, you would have been making $10K a month off that 6-plex within 3 years. That's how one person can go from, I saved up 20 grand, I bought one property, and in 3-4 years, you're now making 10-20 grand a month. We're being robbed of opportunity, bro. We're being robbed of opportunity. But we're still stuck in this fucking range. We still have some opportunity in this range. Don't get me wrong. Look at this hourly, how we're respecting this area right here. We have no top wick. We came up, we formed the top wick. We're now coming down to re-break the lows, and a sell on the hourly break of the lows isn't so bad. On the hourly, we're starting to scoop on the 30. We did close with no bottom wick here, and we came down, created a bottom wick first, and now we're starting to flip bullish. So this could be a small pullback. You could take a buy stop here. This is one of the trades that we take, because right now this candle closed with no bottom wick. No bottom wick means there's no more range for a continuation to the downside. The next candle came down, created a bottom wick, filling whatever was left over of the range, tapping into the closest level of support, and now is flipping bullish, which means if you were to take a sell now, you would probably be in some drawdown because this is likely going to come up and flip bullish for a little bit. There's also no top wick here. Yeah, I mean, the 5 has been consolidating here for a little bit, so this could be that move that we take a lot. So that's how deep you got to look at candles when you're analyzing. So you're like, okay, cool, I'm trying to take a sell, but look at what this 15 and 30 minute did. So you're like, ah, shit. So if this is what this 15 and 30 minute did, maybe we're going to be pulling back here before a continuation. So let me chill out here and see what happens. So yeah, you could take a sell because you're looking at the hourly and you're like, the hourly's bearish, the 4 hours bearish, the daily's bearish. We're about to break the daily lows. But then when you start looking at the 30 minute, you're like, oh, it looks like we're pulling back. The 15, oh, it looks like we're pulling back. So if you look at half your time frames and they're driving in one direction and the other half of your time frames look like they're driving in the other direction, then you want to chill out and wait a little bit until you get more of a confluence. So I like to wait for my higher time frames to give me the setup that I want, and then I look down to the 1 minute and the 5 minute to get that sniper entry, to get that entry that it's not pulling back, or the continuation on the 5 minute, the continuation on the 1 minute, the scoop on the 5 minute SMA after the hourly closes outside of the range. Things like that is what I'd be looking for. But if you look at this 15, you're starting to get that push that we're talking about because of the way that the 30 minute closed. We'll use the bathroom real quick. Ain't no way you could hear me in the bathroom. If you could hear that, then this microphone can hear me think. Hey, because of what you heard, you are now witnessing a W in play. You're now witnessing a W in play. Yeah, bro, it's insane. My mom bought her first rental for $90,000, and now it's worth $300,000. It's insane. It's fucking insane. So, because of where the previous daily high closed, in this range that we're in, I would like to see stuff happen before I start looking for anything. I would like to see price attempt to break out, retest the lows. So I wouldn't be taking any real buys. Until we make a decent bottom wick for the daily. Well, we could get a closure back above here, but then that means our daily wouldn't really have much of a bottom wick. $22 pips, that's trash. Yeah, if we can get some sort of closures above here, we can get closures above here, that would be great. We can start getting some closures above here. That'd be nice. Continuations to the downside don't look bad. It's just market open. I don't like taking entries right now unless it's Sunday. Sunday market open, we had a lot of volume. Is the money printer play gonna work on the 30-minute here? When you guys take the play, do you guys take it on the higher time frame too, or do you only take it on the 1 minute or the 5 minute? Nice, nice, nice. I've been taking it as my wick entries. Right? Like, yeah, it's funny how you can see it. Yeah, man, I like days like this, bro. Days like this is fun because you can just take the bounce off the range, 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 and just low risk trades, bro. When you let them run to the other side of the range, you can make really, really good profit if you identify the proper range day. And if you take a couple stops out, it don't really matter. Because if I would have stuck with all of this 1-to-1, right? Lost 500, made 500, made 500, made 500. You see what I'm saying? So, but I didn't. I increased my risk as I went on. Yeah, I know that when the economy does get better. So this is what I learned from one of the contractors that I learned. He says that when the economy's bad, bro, that's when you gotta position yourself. That's when you gotta work. That's when you gotta position yourself and be in the right mindset to make money and stack up. Start a business, increase your prices to the level, to the market value, so that way when the economy does get better, that everybody has a lot more leftover money and things get cheaper, your prices don't go down. Your profit margin now goes up. Everything gets cheaper for you. So not only does your profit margin go up, but now things are cheaper. So you're really making a lot more money by setting yourself up now when times are tough. So start working, bro. Put in that fucking work in trading and whatever you're actually doing in life, bro. Because when the economy gets better, that your $1,000 just doesn't pay rent anymore. Now you can do something else with your $1,000, bro. It's gonna hit different. You're like, God damn, I need a 100K trading account to quit my job. And then in a few years, things get cheaper, the economy gets better, everything is starting to look up, and you're like, wow, this 100K can now afford me this and this now. So that's what you have to think about, man. Setting yourself up, coming in here, putting in the work, learning a skill, perfecting that skill. I mean, when you're trading and you've been into it long enough, you know if it's for you or not. You know if it's fucking for you or not. When you have a banger day like this, when everything just hits perfectly, the day before you took a loss, the week before you took a loss, you came into the new week like nothing happened, and you took the trade. Why? Because the system works, bro. What do you see here? You see the same setup here as you do right here. You see that same setup right here. You see the same setup here. It's the same setup everywhere. It's just that the system works. When you look for price moving in a certain way at a certain key level, that's all that you need. You just need to price for it to show you that it's rejecting the key level with proper candle formation, however you look at it, some moving averages, some crossing over of the moving averages. When you add up enough confluences in price action at key levels, you understand what the market's gonna do. You understand that if you've respected all of these lows, you came down, you wicked and grabbed liquidity and broke even more lows, and then you started breaking back above into range. What does that tell you? That gives you a clear indication. You don't have to look for more confluences than just this wick down after respecting all of these levels. You crossed over the EMA, you got two confluences right there. If you look at the way that the candles flow and the way that the market flows, bro, you'll really understand. Like when Don explains the top wick first, bottom wick first, before the drive of the candle. If the candle comes up with no bottom wick and it starts driving with the top wick only, there's less chance for it to continue, because just look at probability. Probability states that when the candles drive, there's a bottom wick first and then a drive, a bottom wick first and then a drive, a bottom wick first and then a drive. When a candle goes with no bottom wick, what does it do? The drive is no longer, there's no more drive. It stops flowing. So that is something that you really, really want to take into account. The flow of the market. Watch how the market drives. Does it? It's like, I don't even know. It's like funny to even say it. It's like the market goes like this. The market opens up. Let's say you closed above the range. The market's going to come down, make a bottom wick, and then flip bullish. What is that? That's the break and retest. When you look for the break and retest strategy, it's basically, that's the same movement all candles do. The more you trade, the more you start seeing how everything works. It's just a different lens to view the market. Like, you could have used a trendline break to identify this buy. You could have used a wedge pendant breaking out. You could have used closures above. You could have used a tapping of the fair value gap that we just created on our way down here. So the fact that we created this fair value gap and we retested the fair value gap, we came down, broke into the fair value gap, we came down and retested and drove. That could have been your entry when you look at the way ICT trades. So you see every kind of entry here. And why did I take the trade? simply because it's a range day and we're respecting the lows. We tried to break the lows, we failed, and we came and closed back into range. What does that say? That tells you that price is likely going to come up and fill the range. Your trend line breakout, right? Your wedge, pendant, whatever breakout, right? So I just showed you two different entries right there. Let's look at the ICT fair value gap, break and retest, whatever the hell you guys call it. ICT wicked into it, came down, broke back up. ICT would have bought right here with their stop loss probably down here. Like, I want you to see something real quick. This was my entry. Now I'm going to show you an ICT guy explaining the same entry that I just took. Check this out. Look at my trade. Actually, my trade was sooner. My trade was right here, right? Look at this ICT trade where your fair value gap here, and then you enter over here after you break above whatever the LGBTQ is right there. You have an IFGBTQ here, whatever. I don't give a shit what none of that is. It works. See, you have how we price came down, broke the lows. Bro, price equal lows, price came down, broke the lows, we came back into range, we retested this low right here, and then we started driving up. What is that? What do you see right here? The lows right here, price comes down, breaks the lows, we make that little high, the same high that we had here, price comes down, retests the same retest that we had here, and then we get that push to the upside. My entry was sooner right here, and the ICT entry was on the full break of the wick to the upside over here. What is this, bro? It's the same entry that I just took, and I've never in my life ever traded ICT. What do you see here as well? The daily flip, right? The daily flipped bullish right at this level. So that's another area, another time of volume. When the daily flips, the weekly flips, the monthly flips, that's changing the sentiment for the day, changing the sentiment for the week and for the month. So you start to notice things like that, especially when it's on the brink of the low. So what is the point of me understanding? What is the point of me understanding this low-hanging fruit, engineered liquidity, CISD, IFVG, 4-hour FVG, when I noticed all of the same things with my EYES indicators? So in my brain, my spidey senses are going ding, 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 ding. And my spidey senses were like, yo, pay attention to that daily flip. Pay attention to that liquidity grab below those lows. Is price breaking back above into range after grabbing orders like that? Yes, price is breaking back into range after grabbing orders. And bro, it's just perfect. You have the celery play right here after we broke back into range. So you could have looked for the celery play entry, which is what I did. I saw the celery play entry, and I also took it on the flip of the daily. So once we closed above here, I took an entry. I think I just market executed 3 buys right here. I don't think I buy stop this. I think I just market executed. So what did I say? ICT versus my EYES indicator. Same shit, different toilet. So this guy goes on a 1-hour tangent explaining all this stuff when we have the same setup right here, and I took it exact same way. So it's things like that when you know how to trade and when you know what you're looking for, you know market structure, you know things like that, you can see ICT and how what they're saying makes sense. It makes perfect sense. It's just way too complicated, bro. Way too complicated. Let's look at what this trade is doing. How much did we get? What kind of push did we get off this trade? So we drove 13 pips off these buys. I wasn't paying attention to them. So that 15-minute flip gave us, yeah, which is about right. Usually this kind of setup only gives you between 10 and 30 pips depending on how the market is moving, and that's exactly what we got now. That would have been a beautiful 10 for 10 because the stop loss was tiny as fuck here. The break of the daily lows would have likely been the stop loss. I would have gave it a little bit more just in case we wick the daily lows and then jump up. But yeah, that was a nice trade that we called here. I just don't trade market open, but you can see how the no bottom wick, the candle comes down. This is a perfect example, bro. Look, check this out. Candle comes down with no top wick. We close respecting this resistance here, or the support here. The next candle comes down, forms a bottom wick first, grabbing orders below this support right here, breaking all of these lows here. It doesn't necessarily have to break, but just tapping this level right here, which is this support, is good enough. And without making a top wick first, and then it flips bullish. So what do you notice? This candle has no bottom wick, so this candle came down, made a bottom wick for it first, and then flipped bullish. You would have taken a buy stop here, which is what I marked up. And then likely our TP our break even would have been as we made a top wick for this 15. You see how this 15-minute candle didn't have a top wick? 90% of the time these candles close with top and bottom wicks. If there's no bottom wick, this candle came up and made a bottom wick for it. There's no top wick, so you don't want to take sells here. There's no bottom wick indicating no more range for a continuation to the downside. There's no top wick telling you that price needs to come up and grab more orders before coming down. So this setup right here was a perfect buy to target this top wick area for a wick down. So now that we grabbed liquidity here, forming a top wick for this 15, and now we're driving down, a rebreak of the daily lows is actually a really good trade now. So I'm gonna be paper trading these just so that you could see how market structure works and how these no tops and no bottom wicks are perfect. Yes, the hourly trend was perfect. You could have taken a short and you would have been in drawdown, but when you look down at the smaller time frames, like I was saying earlier, how the hourly, the 4-hour, and the daily all aligned, but your 30, your 15, and your 5-minute was showing signs of a reversal. When you take that reversal right here, you would have caught 13 pips, easy reversal. You don't want to take a swing high here because you're bearish for the day. Your daily's bearish, your higher time frame is bearish. So you want to grab it. You want to take buys into the closest area of liquidity, and then that's where you would likely close the trade, which is exactly what we talked about here. So I mean, this break of the daily lows now for a continuation to the downside after this 30-minute grab some orders. This hourly broke the previous hourly high, is now breaking the previous hourly low. A rebreak of the daily low would be a beautiful, beautiful short. You're starting to ride on the SMA down. So this is a way that I would scalp, knowing that we're bearish, but we've just came to an area where we can possibly pull back at. So how can I take advantage of that pullback and still catch a small piece? When I get so passionate, bro, especially when I'm talking about something that I know about, and like how like the other day when Wix was like, oh, I don't understand ICT at all. I'm like, bro, I promise you, if you take 5 minutes to watch an ICT video and you really look at it, you're gonna see everything that you do on a daily basis in that video. Like how I just showed you guys that picture now, how that guy was explaining you got an IFVG here, you got a whatever here, whatever here, whatever here. But then I took the same trade without it. Like my boy trades ICT and he's funded 100K with my funded FX, and I think he's got another 50K account with Top Step. So in total, he's got 3 funded accounts that he consistently has gotten a payout. I believe once a month for the last couple of months. He showed me 3 payouts now that he's gotten, consistently getting 2K, 2K, 2K. Look at this trade, bang. Look at this trade, gang. Look at this trade, gang. Look at this fucking trade, gang. Look at the trade, gang. You're so lucky my trade time is not till 7:30, bro. I don't trade till 7:30, bro. But I might change that now because of the time change. So now it's an hour earlier. So China volume is going to be coming in a little bit sooner, a lot sooner. So now 8 o'clock volume is normally going to be my 7 o'clock volume. So man, if I would have thought about that a little bit more deeply, I could have probably taken these trades with you guys today. Knowing that our the time change kind of fucked me up, but our time moved an hour back. So the 8 o'clock volume that we were normally getting and the 9 o'clock volume that we were normally getting is now going to be 7 o'clock and 8 o'clock. See, tonight, see how I have my contract size to 2? This would have been a 13 pip trade. So this would have been $230 win. And this trade right now on a 2 lot would have been up. We're up 9 pips. So it would have 10 pips. So it would have been up another 200. So that's $430. I need 500 to pass this phase 1 or to pass this top step. I would have almost passed the account. Maybe if we get another good pop here, I would have passed the account on live with you guys. I literally forgot about that time change. If not, I promise you I would have taken these trades. I swear I would have taken these trades. It's so fucking wild. But yeah, these 2 trades would have passed the account, and I would have went into tonight with a live top step account. But look at that. That's already the rebreak of the daily low for the second time, and that would be a break-even trade here. So this dub was 13 pips. Yeah, man. This is good. This is actually really good. If we start coming down here, by the time that we come back at 8 o'clock, that'll be Asian Open, and we can start looking for possibly some buys coming off this area here. Possibly. But the 4-hour, everything looks so fucking bearish. So we would have to have a closure below all these ranges for the 4-hour open to really continue bearish. We'll see how we're coming down with no top wick on this hourly. That's not good. We close with no bottom wick. We have no top wick on the hourly. So yeah, price could easily come down, continue down, make a deep bottom wick for the daily, respect all these levels here, and then continue to the upside. The same exact thing that it's been doing here. But even then, this continuation to the upside is large. Bro, JT, bro, you've missed a master class of price action here today, brother. Master class. You're over there cooking when you could have had me in your ear listening. JT is one of my Hamilton Mena is one of my trading buddies. I've been trying to get him to show up more often, get more involved in the chat, start talking a little bit more. My dog Richie. Yeah, bro, I just explained the top wick and bottom wick concept, and how even though you're in a continuation of the trend, how you can take that top wick and bottom wick concept into action on the smaller time frame and take trades counter trend and still take a continuation of the trend, like I just showed you right here. We took a buy stop, or I took a paper trade here that ran 13 pips, and another paper trade here that I went break even now at 10 pips after re-breaking the daily low. So we kind of almost tapped this area here, so we could possibly pull back here. Oh. Fucking women, bro. My girl just called me, yelling at me about some pants that she got me that didn't fit, and I didn't return them, and she went to go return them, and now she can't return them. Like, well, as you can see here, we're starting to drive down. Beautiful price action in play, beautiful calling of trades in play. Beautiful, 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 beautiful price action today, bro. Look at this, bro. Look at this, dog. Come on now. Come on now. You think I'm playing with you? You think I fuck around? Look at that, bro. Look at that, bro. I know I'm stretched out here. That's only 16 pips, but I would have passed this funded account tonight, dog. It's all good, bro. I'd rather have her yell at me and bitch at me than her not call me and not bitch at me. This is my first account on Top Step, my first one, first try. Let's see how I do. You know I'm a savage, Richie. I just be getting emotional. And the gambler mentality starts to come out sometimes. I really gotta work on that. Check this out, gang. Full transparency. What do you want to see? This is the Top Step trading log. What's Eddie Lift's social? Ah, that's not on Google. I tried, bro. Listen, gang, you see my boy Richie right there, Rodriguez? He's been practicing Web3 development and working and studying in that shit. This guy's a savage. So he's been working on a trading journal, trying to get a lot of the concepts from TradeZilla, from different things that we would want to see incorporated, and he's going to try to work on a trading journal. And in the future, when I start my own Discord, and I think it'll be incorporated into Discord, the trading journal. So you'll be able to go into Discord, into a tab in the Discord, and you'll be able to have your trading journal in there and upload all your stuff, kind of like TradeZilla, but not no fucking $50 a month. But yeah, it'd be pretty cool, like our own trading journal. He's managing my boy's sports betting Discord. I don't know if you guys sports bet or not, but he's my ex-cousin. My dad was married to his aunt for years, so I grew up with him. But he's sports betting now. Locks. Let's see. Bro, these guys be hitting some fucking trades, bro. It's just like trading. So my boy Mario only does mainly one-to-one trades. So if you look over here on the parlay there, he bet 500 and made 500 back. So in total he made 1,000. But if you guys are interested in any like that, hit me up. That shit's wild. I've only taken one trade and I made 30 into 60 bucks. And then I bet those 60 bucks on my own and I lost it all because I'm an idiot. Richie, send me a link. Or I guess I can just put a Discord invite link and I'll make it a Nightbot command. Remind me to do that. Text me. But look, I'm gonna show you why RR is irrelevant. and win rate is what actually matters, right? You see how my average win is $119 and my average loss is $130. That's a negative RR. How come I got a negative RR but I'm still profitable overall? Because my win rate is so high. I have a 70% win rate. So I win 7 out of 10 trades. So 7 trades that I win, $119, that's $833. And then I lose 3 trades, $131 minus $833, that's $440. So that's 1% every 10 trades. So if I scalp 10 trades, I can make 1%. Risk to reward ratio, pretty much 1 to 1 to 1. So when you look at the other trades that I trade on the Nasdaq, 75% win rate, and on gold, that's micro gold, it's regular gold, 70%, 73%. So in total, I have about a 72% win rate. I have a much higher risk to reward ratio on the Nasdaq. On the Nasdaq, I'm a fucking savage. These are my trades on the Nasdaq. Mini contracts, tiny little contracts. Look at this, $300 on 0.4 contracts. Yeah, this is my first one. Look at that trade, gang. Yeah, that $50 for a trading journal is wild when you can just do like a YouTube membership for $5 and get a full trading journal. Yeah, bro. Doing this for the people that don't want to spend no money, dog. Fuck that. $50 for a trading journal? That's wild. It's just house money at this point, gang. House money. Did anybody copy any of these trades? That's beautiful. We're gonna hit TP right on camera. TP would have been right there. Probably sooner. I like to aim for the body and then I give myself a little bit before just in case we reject it. You're still merging your, okay, I got you. I'll show you real quick. I'll give you a little rundown, right? So what do you notice here? You see on your dailies, I already have the daily candle on the screen. So this is my daily candle. You see your daily's bearish. You see your 4 hours bearish. The last 3-4 hours are bearish. We're clearly on a bearish trend. We come down to our 1 hour. We're still bearish. We've made a resistance here, and now we're continuing bearish still. Boom. So now we have those 3 time frames in a line. We look at our 30-minute. Our 30-minute formed a support right here, but we're still rejecting this area and we're staying below our SMA now. So now we're 30 minutes in line, still bearish. When you look down to your 15-minute time frame, that's where we had a little bit of issue earlier, where I said, okay, we're forming support here on our 15-minute, and this candle closed with no bottom wick. That's where you have to start incorporating some different concepts together to understand what's going on. So even though we were bearish on all the other time frames, I understood that these last 3 15-minute candles closed bullish, right? So we're starting to form some sort of support here. When this candle wicked up and rejected and we started to come back down, I'm like, okay, maybe this is the continuation to the downside, but then we closed respecting this support once again with no bottom wick. So all your time frames aligned except for the 15 to the 5 to the 1. So you're saying, okay, you could have a slight pullback. So you can either take advantage of the pullback like I identified here, or you could have said, okay, all my time frames aligned except for my 15, 5, and 1 minute. What is the 15, 5, and 1 minute telling me? It's telling me that we're forming support and we could have a possible pullback. I don't want to take that pullback because we're not pulling back off of any level, any major level. We're pulling back off of the middle of a range. this would be a good pullback area, this would be a good pullback area, because these are larger time frame supports that we're pulling back off of. So cool, we're pulling back slightly. That might just be for liquidity for a continuation to the downside. So once you understand that, okay, maybe the smaller time frame is going against the higher time frame, but maybe it's just for liquidity for a continuation. You need market moves. The market has structure, right? So the market moves. Where's the shit at? If your market's bearish, you're gonna have a lower low, a lower high, lower low, lower high, lower low, lower high, lower low, lower high. So maybe this is just a lower high. So price came down, made a low, came up, made a high. We made a higher low, but then we made a lower high, respecting. And since you know you're bearish on a bearish trend, you can now say, okay, we came up, we tried to break up into range and we failed. We tried once again to break up into range and we failed and flipped with massive volume. So you can take you can go back to your higher time frame after you've realized that your lower time frame is just grabbing liquidity for a continuation. So your higher time frame can align, and your lower time frame could be going against what you're seeing, but as long as you gotta like really kind of paint the picture, because even your higher time frame is bearish, your lower time frame is bullish, but where is it bullish from? It's bullish from a random area that's not really gonna give you anything. So this area, the last time that we drove off of it, we drove up to here. So if we started creating support here and trying to come up and failing to come up, that's telling you that we're just grabbing orders to continue down on the lower time frame. So then that's where you look for your entries to come down. So like you would enter on the higher time frame, right? Maybe on the flip of your low, or you would enter maybe on the flip of this candle, break of the daily lows. So you want to get out, you look left. Where do you have clean traffic? You got clean traffic right here to this level here. So let's delete everything. And let's say you took a short here before this move down. Where would you be targeting? You look left. You have clear range here with nothing stopping you, right? You already broke through this level here, and now you have clear range here with nothing stopping you. You look to the left, and then you can start marking up your areas, right? You got a level here, you got a level here, you got a level here, and then you kind of take the middle of all three of these levels. That you don't want to go back too far, but the most recent. So you have a level here, a level here, a level here. This looks like it's the middle of the level of all three of these most recent levels. You also have another level right here, which doubles up on this one, which gives you more confirmation that this is a really good level to have your TP at. So you just take averages, bro. You start looking left and you look at previous data. So you just seen right now live how I marked up these three levels. I got the average and price rejected perfectly off this level, and we're now pulling back to the upside, right? So that's how you look for your take profit. If you look down to the 1 minute, we have minor support right here, but it's overall clean range to the downside here. So that's very, very clear how you see how we wick down. This would be an FVG for ICT traders, right? ICT traders would have looked at this right here, called it an FVG. Price came down, wicked into it, and drove up. So it almost wicked into it, or it did wick into it. But you see how all these but like, for example, you saw how the entry that we had here on the break of the daily lows, which was a flip of the 30-minute right here. See how this 30-minute flipped and broke the lows on this entry right here? Your target, you go down to your 15 and your 5-minute, and you start taking these levels down, and you start getting an average of the most recent levels, right? So an average of the most recent level, the average came out to this one right here. So my TP would have been right here. Why? Because I don't want it to be right at the body. I want it to be before the body, a little bit before, just in case. So luckily this first wick came down and wicked it. because if let's say my TP was right here and this first wick came up and we started pulling back, I would have closed immediately. I wouldn't have waited for a second retap of my entry. So once we came 1 pip away from where the target was, I'm closing immediately. Thank you, Richie, bro. Thank you. I appreciate you, bro. But see, that's how I scalp, bro. I look at the higher time frame and you just start seeing what the market's doing. So I knew that the market was trying to come up for a pullback because of the way that it froze here, the way that the 30-minute closed. So I took advantage of that pullback. I knew that once we had that pullback, if we rejected this area right here, that would be a respect of the that would create a lower high, and price would continue likely to the downside to continue the trend on the higher time frame. And then that's when I marked up the sell here. And then where would you target it? You would target it, and that's how I showed you how to find the target on the 5-minute. And look, we rejected perfectly off that. So that's how I scalp, and that's how I find my targets when I scalp. And that's gonna be it, broskies. I gotta go take my work truck back. Take it easy, gang.